Need Bitcoin support? The pros at Coinbase Connect are here to help. Learn about self-custody, privacy, mining, lightning payments, and much more. Simply go to coinbase.com/connect and schedule a one-on-one video call with a Bitcoin pro. Take your knowledge to the next level by connecting with a pro on coinbase.com today. Please check out episode 41 with Adam O, aka Denver Bitcoin on Twitter, episode 46 with Hodl Tarantula, or episode 49 with Adam Meister. All are pros you can connect with at coinbase.com connect today. Hello, everyone, and welcome to the show. My name is Chris Alemo, and I am an amateur investor. This podcast is my open source journal of everything I learn about investing and wealth management. I'm here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path towards financial independence and financial literacy. My mission is to build us from amateurs to experts. All suggestions are my own, and I recommend that you should do your own research before taking any investment advice. See you in this week's episode. I hope you enjoy it. All right. Welcome to the show, everyone. This is episode 60 of the Amateur Investors. Merry Christmas for those that are listening, or I guess it'll be coming out next week. So it'll be happy holidays and hopefully going into the new year with a new all-time high with Bitcoin price, or potentially new all-time high with gold price because of my guest here. But in this episode, I'm going to be interviewing the investment manager, sound money advocate, gold stock and Bitcoin fund manager, Austrian economist, and anti-federalist, Lawrence Lepard. Lawrence, thanks for coming on the show.
Hey, thanks, Chris. Very nice to be on your show. I've enjoyed watching it.
Thanks. It's nice to have you here. I love a lot of your content. I know I've seen a lot of it on the Kaiser Report. I know a lot of the Bitcoiners saw your rip with Marty Bent on Tales from the Crypt. So we're a pleasure to have you. I know many people kind of go after the gold bugs and the gold folks, but I kind of see us as, on the same team versus, against each other. And I think it's more of a sound money team than per se, I guess a lot of people just put us at odds with each other, but I think there's a lot more fiat problems than there are with gold and Bitcoin.
As we talked about before the show started, there's a lot of room for both to win. And while I accept that Bitcoin will displace gold over time, I think in the interim, there's a role for both. And, to me, gold is kind of the gateway drug, to the hardcore of Bitcoin. So, I mean, I've got people who don't own any gold and they don't even understand what sound money is. And I can get them to buy gold coins. I mean, get them to go to Bitcoin when they're 60, 70, 80 years old. Boy, that's a stretch. So I want to see fiat fail. And I think you guys want to see fiat fail. And I think fiat is failing. And so yeah, I view it as we're on the same team, not that we're the enemy of the Bitcoiners or vice versa.
Yeah, I definitely agree. And I know just like for myself, they're on the same team in the sense that, I agree with a lot of the gold guys, like 90% of the way. So it's like, why are you trying to fight with someone that you agree with 90% with versus someone that's like, you only agree 10% or 20% that thinks both gold and Bitcoin are both scams in and of themselves. So I just never understood that.
The bond market is the target. I mean, the people and to a degree, the stock market. I mean, the people in the bond market, they're the ones who are going to get fried here. So.
Yeah. All right. So Lawrence, if you want to provide my listeners with a little bit of background on yourself, I know I gave you the intro.
Most people probably know this, but I'll make it real quick. So, I grew up in the Midwest. I studied economics in college. Of course, didn't get taught Austrian stuff. I got Keynesian stuff. I went to Wall Street for 2 years. I was a financial analyst with an investment bank. I went to business school, went to Harvard Business School for 2 years, got a degree there. I focused on investing coming out of there. And I was fortunate. My father had said, if I were you, I'd get involved with these computers and technology. This is 1980. The Apple II was out. The IBM PC had just been announced. And so I wanted a way to invest in those. And I joined a venture capital firm. And so that was a great thing to do and worked out really well. And I invested in floppy disks and memory and disk drives and graphic cards and all the major stuff going through and local area networks, et cetera. And this was with the first firm I was with, and then there was a second one that I was one of the two senior guys at. And we were very fortunate. In 93, somebody gave me a business card with an internet address on it. And I said, what's that? And they said, it's the it's where you're going to send this stuff to me. I said, yeah, okay, internet, where is it? And he said, well, it's nowhere. It's a network of these computers talking to each other. And I realized how powerful that was. I went back to my office. I said, guys, we're going to invest in the internet in a big way. So from 93 to 5, we did nothing but internet deals. And of course, that worked out great. We did quite well. In 2000, we sold everything we could. We couldn't sell all of it, and some of it wasn't working. And of course, that bubble burst. But underneath that bubble, there really was a real technology, and it was, as we all know, changed the world, unlike what Paul Krugman suggested it would do.
I was going to bring it up with his
Yeah, right.
comments alone.
The relevance of a fax machine, right? So, but it's hard to see how it was going to evolve, and there were a lot of twists and turns. And I remember many debates that probably were similar to the forking wars and other things that Bitcoin's gone through. And so here we are. And I kind of retired actually after that run in the internet, because the venture business had gotten quite crowded, and I wasn't happy with the ethics of how the business was going in a lot of areas. And I said, I'm going to retire and spend time raising my kids. And I did that. And then 2008 came along, and I'd saved up some money through all my working. And 2008 came along, and I was shocked at what happened, the way they bailed out the banks and printed a lot of money to do so. Not just a little bit of money, but a lot, in today's term, less than then. And I thought to myself, you know what? I'm in trouble. I've got these savings, but this isn't going to, I'm, my mid 40s or 50s, early 50s. This isn't going to last me long enough to get to the end point. I've got to defend myself because they're inflating the currency. And so I self-educate. I've been a gold and silver guy all along, but now I became a hardcore gold and silver guy, because I realized that they were debasing the currency, and this was not good. And so I shifted, I pivoted, I started another fund. We began focusing on gold and silver mining companies. And that did quite well for a few years. And then I ran into the buzzsaw of a mid bull market correction in gold, which everyone who's in it knows. It hit 1900 in 2011. And by 2015, it was at 1050. Mm-hmm. And so I got my ass handed to me. It was a very humbling experience. But I realized that fundamentally I was right, that longer term, this monetary system was designed to blow apart. And so I stuck with it. And throughout all that, I became aware of Bitcoin earlier on. I was a Ron Paul supporter. I saw the New Hampshire Free State Project. There's a great story about a woman who I worked with up there who did some graphic arts work for me on some ads I ran for Ron Paul. And somebody sold her 200 Bitcoin at $8 a coin in the early days. She still got them, and God bless her, right?
That's awesome.
We all have those stories, and I didn't get it that early, and I was interested. I tried to buy off the paper wallets. It was kind of hard. I didn't want to go meet a guy in a coffee shop and give him money to get some coins. So I waited until Mt. Gox came around. I was in the process of applying for an account at Mt. Gox, and it failed before I got in there, fortunately, because I probably would have lost all my money. And as you all know, right after that, Coinbase emerged. Mm-hmm. And so when Coinbase emerged and started selling coins, I got some coins. I got them actually off of the first dip. It ran to 1,000, dipped back to 300 or 400, and I bought some coins.
That's so awesome.
I became a Bitcoiner, but not in a big way. I was running my gold fund, and I thought this is a really interesting experimental form of sound money, but it had a ton of issues, as we all know. And as the issues fell away, I got more and more confident. I kept buying and adding, and I was adding right up until 2017. That Thanksgiving, Christmas of 2017, when we were all excited. I paid $17,000 for a coin. I probably top ticked it. I paid 70 grand for a coin. Then we know what happened next, and it went down to 10 the next year, and then went to 3.5 the year after. And when it went to 10, I bought some more. And when it went to 3.5, I bought a lot more, because I kind of figured, I think the thesis is right here, and I'm either going to lose all this money, or this is going to be worth a ton of money. And so, and what it kind of shows you is, I think some people's reaction to that volatility is, oh, this isn't working. This is a bust. I'm wrong. God damn it. That person convinced me to buy it at 17 and look at it. It's 3,500. I'm a stupid idiot. I'm going to blow it out. And my view was, no, it's, thesis hasn't changed. It just had a real big correction. So, and honestly, I didn't know if it'd come back, but I thought, well, in for a dime, in for a dollar. So I doubled down. And then it's, as time has gone by and, issues have gotten resolved, I've gotten more and more confident in it. And I'm now at the point where it's a part of my fund. I've recommended it to my investors. I made a speech in New Orleans supporting it. I mean, I'm a full-blown Bitcoiner. I completely and totally believe, and I do think ultimately it will probably supplant gold. Unlike most Bitcoiners, though, I think a lot of people think that's going to happen instantly, and I would suggest that the time frame for that is not instantly. It's measured in years, and that's because there's a lot of inertia in gold. There's 5,000 years. There's 6 billion people. Some people don't even know what Bitcoin is. Don't get me wrong. I think Bitcoin will, on a price basis, outperform gold. It already has massively. I think it'll continue to do that. But, if you're looking for lower volatility, Bitcoin's not the place to be, because as we all know, you got to be able to ride these waves, and sometimes they're pretty big waves. I think we're going to talk about that. So now I run a fund that's about 80% gold, about 20% Bitcoin. My PA is much more heavily Bitcoin, but over time, if it continues the way it's continued, that 20% will grow substantially, and then I'll have to make a decision: am I still in the gold fund business at all? But I'll deal with that when I get to that bridge. So, and I strongly believe that these are both outstanding forms of sound money, and I strongly believe that sound money is the issue of our time. It's going to get resolved in this fourth turning, and I strongly believe that when we resolve it, the world will be a much better place. But I also believe that there's probably going to be some rough spots between here and there, because I've kind of observed how things have worked over the last 40 years, and it's kind of a rolling crisis, so to speak. So that was long-winded, but I hope that answers your question.
No, I think that was great. I think that was excellent. I guess better than most in the first block of Bitcoin, the message that's encoded on the blockchain says the Times 03 January 2009, Chancellor on the brink of second bailout of banks.
Yes.
I think you and I, being sound money advocates, can definitely agree with that message and sentiment. Even though it's just a very short sentence, it makes sense that, you're saying, okay, there's a chancellor, it's bailing out the bank a second time. It means that they failed again, or they were nefarious in nature for a second time.
Yes.
So, you do it once, shame on you. Do it twice, shame on me, kind of deals the way that I think a lot of Bitcoiners see it.
That's exactly right. And we know it's coming, right?
Exactly. And even we saw it again. I mean, I was still in high school in 2008, not to date myself as much, but I've really only been in equity markets for about 70 years and investing. So, I was very young, but when 2008 happened, obviously it affected my parents and my dad. They kind of understand it, being, long-term investors themselves. But I guess 2020 was the time a lot of millennials or people my age kind of saw the market shake out, or I guess shake out as we call it. And then it was a quick, very quick correction. And I think a lot of us started investigating what was going on by just printing trillions of dollars and stuffing it into the markets. Obviously, you'd see the prices increase on a nominal basis, but that doesn't mean that fixes a lot of things. If printing money fixed all the problems in the world, Zimbabwe would be a great country to live.
That's exactly right. And it's really pretty easy stuff. And yet, very important looking wealthy people in suits get on TV and try and claim that what they're doing is professional and right and intelligent and fair. And, it's a long list of the lies that we get told. But, what I love about Bitcoin and Bitcoiners is that they're able to see through all that nonsense and say, hey, no, you guys are full of shit. And we call, we got these coins, there's a fixed number of them. And guess what? You're in a lot of trouble. Just let time roll on. So it's a great time. I mean, it's not every day that you get a front row seat to the collapse of a monetary system, and that's kind of what we got. I think one of the tough parts that I think people are going to bump into, though, especially for guys who've jumped in 17 or 2020 or whatever, is Rome wasn't built in a day. This is going to take longer than I think the average Bitcoiner would like or would hope. I mean, I hope we have hyper Bitcoinization within 3 years, but I don't think that's going to happen. I think this is going to be a little bit of a drawn out process with a lot of give and take and back and forth, and we're going to just slowly resolve issues. And I'm very comfortable that in my next 10, 15-year lifetime, that's going to occur, but I'm less comfortable that it's going to occur, instantly, the way I think a lot of Bitcoiners think.
Yeah. I think we've got a long road to go. But I'm very hopeful for the future in terms of the long time horizon.
Oh yeah,
definitely.
Oh yeah, no, we'll get there.
Yeah, so I guess talking about your episode with Tales of the Crypt with Marty Bent, I believe it was on that. I don't know if it was on the Kaiser Report, but I remember you were saying back in 2008, 2009, I guess, I don't know if you were shorting the market very similar to Michael Burry.
Going into that GFC, I was short all the financials, Fannie Mae, Freddie Mac, Lehman, Ambac, MBIA, all of them, AIG, mm-hmm. Right? I mean, we're going to talk about AIG more in the future. So, and the government outlawed it. And so I think where you're going with this question, I'll just bring it up right up front. I mean, one of the things we've got to consider here is, the government will continually change the rules. And in your show notes that you sent to me when we talked about this, I mean, look, they did it in GameStop. First of all, they did it to the Hunt brothers, right? I mean, the Hunt brothers basically had the silver market cornered, and they were going to break the government, cartel on suppressing the price of silver. And the CME basically changed the rules, said no, no more buying, it's liquidation only.
Yeah.
And that was that, and they ruined the hunts. And so, all of the thing we've got to consider that I think some Bitcoiners miss is that at a geopolitical level, the governments actually are very aware of and intelligent about the monetary system. And it's probably discussed at the Pentagon and in other places. I mean, it's part of the American framework of power, US dollar hegemony. And so, when they see things threatening it, they can and will change the rules potentially to defend their interests. And so, and I saw that firsthand, it cost me and my clients millions of dollars because they basically forced me to cover all my shorts. And, I went from having a year where I would have been up 50% to having a year where I was down 6%. And yeah, right. And just because they changed the rules, it's like here we're playing, it's like here we're playing this game, guys. And, okay, Larry figures out that, these things are bankrupt and that therefore they're good companies to short. I mean, I basically did what the Big Short, was all about, right? I basically shorted all those financials. Of course, I didn't do it with CDS. I just did it outright in the market. I wasn't even aware, sophisticated enough to know that CDS was available. But, they realized that short sellers were hurting the price of these stocks, and it was a shooting fish in a barrel to short these names. And they said, fine, we're going to stop short selling in these stocks. We're just going to ban it. So, right. So keep that in mind when you look at the government and, some of the things that could happen. And we'll discuss that as we go forward. But, they will change the rules as needed. I mean, there are national security directives that have been put out that say that, banks, for example, don't have to really report their true financial statements if it's a matter of national security. I mean, you have to dig deep to find it, but people have found it. I mean, there are rules that can be broken to support the dollar and the overall health of the financial system in this country. And anyone who thinks that those rules might, not be broken in a very dire situation is being naive, because they will break those rules. I mean, there's just no doubt in my mind.
That's wild. I was getting physically ill when you're telling that story to Marty. I was like, are you kidding me? Because like I said, Marty's a little bit older than I, but we're millennials. We were in high school and or early college. And then to find out that they can change the rules of the game. It's like, imagine you and I sit down to play Monopoly or any board game. And then all of a sudden in the middle of it, my buddy comes in who doesn't like you and says, oh, I'm going to make rules that benefit Chris over Lawrence.
Yeah. And I own Boardwalk and Park Place and all these places. I got a bunch of hotels on them. You're screwed.
Yeah, exactly.
Right. Yeah,
it's like it just I can't fathom it. But I guess
well, I mean, look at the GameStop guys, right? I mean, they had those guys. There were 130% of the shares short, and they could have bankrupted, some very big and well-known hedge funds. And I mean, to the same thing. I mean, you get the basis trade that these guys have done, that Sentinel and all these other guys have done. I mean, they were basically bankrupt in March of 2020. And swap lines from the Fed, quietly done under the table, allowed them to wriggle out from underneath it. I mean, they will give their money, they will give free money to the people that will push their agenda, in an unlimited way. Where this really becomes relevant, because it's what we ought to move into next, and we're going to get to Bitcoin and how it affects Bitcoin, is in the derivatives market. I think it's very important for people to think about something and think about the issue of balance sheet games. So everyone, I think, knows what table stakes poker is, right?
Mm-hmm, yeah.
Table stakes poker is you can only bet what's on the table, right? So if you think about it, one of the stratagem in that game is you have the most stuff on the table, you get a good hand or even a bad hand, you bluff and say, I'm willing to go all in. Nobody can call you because they don't have the money to match your amount, right?
Yeah.
You win the hand. Okay. So what that really is the biggest balance sheet, the biggest amount of money on the table controls the game. Okay. So who has the most amount of money on the table in the world? By definition, the central banks, because they can print it. Okay. Yeah. So, and this is what they've done in the gold market. They because they're bigger than anyone else, because their balance sheet's bigger than any individual's balance sheet, they can overwhelm a bid stack and destroy real price discovery. And then you add on top of that the whole notion of derivatives. Derivatives are just an extrapolation of the balance sheet game, which allows somebody through leverage to create an enormous bid or ask on something and overwhelm the natural market pricing. And, as Buffett says, I mean, derivatives are weapons of mass destruction. And so, when you get a big derivative game going, you more or less can control the underlying and the price. And we know they're afraid of this, and we know they've done it. And there's so much evidence, it's just overwhelming. Go to gata.org, you can find all the evidence. But a good example of them even talking about it was Paul Volcker in his memoirs, talking about the gold price runaway. I mean, you realize that what we're talking about happening kind of happened in the 70s. The gold price went from 35 to 800. And, they were kind of losing control of it. And I recall it. My grandfather was saying, well, the dollar is going to fail. Gold is going up against the dollar every single day. The dollar is going to fail. And Volcker came in, put high interest rates up, created enormous positive real rates. And of course, he saved the dollar. But the point is, I mean, he wrote a memoir after that whole event before he died. He said, one of the great mistakes we made in the 80s was we didn't make a larger, or 70s, we didn't make a larger effort to control the gold price. Oh, larger effort, meaning there was an effort, right? So, look, when Bitcoin went from 10,000 to 50,000, you can bet that alarm bells went off in Washington, right?
Yeah.
And you can see, in the Elizabeth Warrens and the Hillary Clintons and the evil status that we all know and love so well, you can see how this literally scares the shit out of them, and it should. The BIS, et cetera. I mean, they all know, they get it. I mean, they're evil, but they're not stupid, some of them. And so this derivatives game is a big issue, and it rolls into the Bitcoin space. And I don't know, I'll let you ask. I've been talking a lot, so I'll let you ask the next question. But we're going to get into kind of how does that impact Bitcoin? What does it mean? Because a lot of people ask me that, and I have a theory on it. But let me give you a minute to. Perhaps I'm going in a direction you don't want me to go. So.
No, I like that. I mean, even it's, and not to say, the global conspiracy of it, but even Christina Lagarde, she's the central bank, or the president of the Central Bank of Europe. She's even said we need to squash or get rid of exit plans or exit paths, and she sees Bitcoin as one of those. I mean, she literally said the quiet part out loud, which everyone in the Bitcoin community is making fun of her, saying like, oh, we need to get rid of the exit hatches. It's like, why are you saying that? Oh, because the game's rigged. We need to keep everyone in our little bubble so that way we can win. So I mean, alarms are going off, and if it's any more proof in the pudding, they're literally saying that they need to do that. So I fully believe that. I guess
Madame Inflation, we call her, right?
Exactly. That's a great name for her. So I guess I have one comment and then one question. So I know Greg Foss. I don't know if you know him. He was a bond.
Oh, I know him well. Yeah, he's a friend. We exchanged. In fact, I was DMing him this morning. So he's a good guy.
Greg's an awesome dude. I got a chance to interview him a couple episodes ago. So there was a podcast, not on mine, but one very recently. Someone commented on something saying, "Oh, Greg, like it was something to do with." Like he was like, oh, it's only the sum of for markets, it's only the sum of one different thing of whether it's paper or whether it's the spot asset itself. And Greg said that's not true. He literally stopped them in their tracks. He's like, no, when you're addressing markets, it's the sum of everything. So exactly to your point, when you're talking derivatives, the reason they were able to suppress gold prices, and maybe you can explain this better than I, but like basically when you have a spot price of gold or spot price of Bitcoin or whatever asset, you also have to account for the derivatives on top of that, because those are, assets and liabilities on other people's balance sheets. Whether they're real or not is a different question, but those can definitely move markets in a direction up or down based on leverage or liquidation or based on loans or whatever you may be seeing, where basically the person was trying to say only the spot markets matter. And he's like, that's the furthest thing from the truth. And he was getting into that with bond markets, with equities, with stocks, with real estate, with anything. There, you need to account for the liquidations of that. I don't know if you want to comment on that.
Greg is absolutely right. And as a long-term bond trader, he would know, and I've been in the financial markets long enough that I know as well that he's absolutely right. I mean, the market price is the cumulative value of all the buying and selling, even the on-chain and off-chain stuff. And a lot of people say, well, yeah, okay, fine. You could create paper gold because the gold's opaque and we don't know if it's in Fort Knox and this, that, and the other. And Bitcoin's different. Bitcoin's on a chain. You can see every one of them, blah, blah, blah. Therefore, there could never be any manipulation in Bitcoin or any government level manipulation in Bitcoin. And there's, let me unpack that statement. People are right. Bitcoin is different. Okay. And Bitcoin is going to be able to overcome overall manipulation. Bitcoin is ultimately going to be true price discovery. Okay. However, it's not different in the sense that an ecosystem has grown up around it in derivatives and trading and leverage that makes it look very much like any other financial asset, including gold, which has been heavily manipulated. And that ecosystem is what can create the volatility, and it's what can also lead to big problems. I mean, for a moment, let's just talk about the notion of leverage, okay? And whether leverage is creating a paper bid. And I would submit that, and I think there's a person that everyone who's listening to this ought to follow, and probably most of them do, on Twitter, called Caitlin Long, who runs Avanti, and we're an investor in her company, in my fund. But Caitlin points out, and rightly so, that the leverage has created an enormous bid that otherwise would not be there in some of this stuff, and that the bid can lead to both upside moves and downside moves. And so let's go back to 1929 and look at that as a case. I mean, everyone says, well, stocks crashed in 1929. Yes, one of the reasons. So in the case of 1929, what happened is, you could buy stocks at that time on 10% leverage, which is also, so that led to the spike, but that also, when the trend turned, that also led to the collapse. Okay. And so leverage creates, I mean, and so there wasn't enough money to buy those stocks and push those stocks up to the price that then ultimately, when it went over the top, led to a collapse. It was a credit bubble. Okay. It led to a collapse on the other side. Well, the thing that Bitcoiners should be aware of, and they should be concerned about, is that there is a lot of leverage in the Bitcoin community. Okay. Well, two things. One, there are futures. So there's a futures contract on the CME, but I've done the math on that, and I put up a thread on that on Twitter. It's pretty small. I mean, that's not pushing the price of Bitcoin around, but there is a futures contract on it. The bigger thing that I think is a risk for Bitcoiners, that Bitcoiners have to be aware of, is that there's absolutely enormous leverage in this system. And whenever there's leverage, it can lead to games, because you're kind of starting to drift back towards what I call that balance sheet game. Who's got the most money, who can borrow the most? And it's entirely possible. I mean, you look at some of these brokers, and I'll list a few of them off, and some of the leverage ratios they have. It's just stunning to me. And all of this, by the way, is available on Glassnode, which I learned about from Caitlin. Is a really great site for looking at kind of on-chain analytics. But you look at Binance and FTX and Bitfinex and PrimeBit and Stormgain, all these. I mean, Stormgain is allowing people 200 to 1 leverage on Bitcoin.
That's insane.
Right? And all these other guys are allowing, and with an asset that's volatile, I mean, you're basically just giving your money to the house. But the point is, at a large and sophisticated level, there are people in these groups that are taking on a lot of leverage and thinking, okay, let's run, and they're kind of doing a small scale version of a pump and dump. Let's get out there on Twitter. Let's say it's breaking through a support line, a resistance line. It's running, and they know that people FOMO into Bitcoin, right? Oh my God, it's at 69. It's going to 120. I better buy it. I better buy it. I better buy it. And then once they're done with they're pushing it up, they think, okay, this is a good point. And then they just hit the bid stack. Okay, 4 billion of leverage unwound, sold to you. And guess what? The little hodlers aren't there to catch it. And the next thing you know, the 69 is 40 overnight. And that happened because 8 billion, there was I think $12 billion of leverage contracts, as shown on Glassnode, that collapsed down to 8 in the space of like 3 hours.
Yeah.
And so the point I'm trying to get at is that the stuff is extremely, extremely volatile, and that the leverage is, in a sense, a form of paper Bitcoin, as Caitlin points out. And she had a very good thread on it, which I retweeted this morning, and people should go take a look at. But as long as that leverage exists, Bitcoin is going to be volatile. She made another point that I thought was extremely interesting, which is, she said, there's never been anything like Bitcoin before. I mean, so this has gone on in other things. It's gone on in gold. It's gone on in other commodities, but those are all controlled by centralized clearinghouses, and those all have a lender of last resort behind them, the US federal government. Bitcoin has no lender of last resort, and so it could completely and totally unwind. And she made the point that she thinks a GSIB, a globally systematically important bank, is going to fail because they're going to get over their skis, too far out over their skis with leverage on Bitcoin, and it's going to blow up. And, I actually think a big Bitcoin brokerage could potentially fail for the same reason. I mean, look, the chain is the chain. You either own the coins or you don't. Okay. If you claim you own the coins and you don't own the coins, and the coin goes, let's say, let's just do two really extreme scenarios. We wake up one morning and the coins are at 300,000 a coin. Okay.
Mhm.
A lot of people are going to feel great. Some people are going to go hit that bid and offer it, etc. But somebody who was short it is going to be bankrupt. Okay.
Yeah.
And that's a short squeeze, and it's going to continue. And does it stop at 300,000 or does it go to 3 million? Do
Yeah.
you know what I mean? I mean, and anyone who doesn't have it is going to be wrecked. Okay.
Mhm.
Flip side of that, same thing. We wake up one morning and Bitcoin's at 10,000. Okay.
Yeah.
Everyone who owns a coin unlevered is a hodler is going to say, well, that really stinks, but I still got my coin. Anybody who was levered, in any way, shape, or form, they might have been blown out.
Yeah.
They might have been forced into selling, to meet the requirement of whoever it was that lent them the money to buy the coin. So the point I'm trying to make is that the right amount of leverage in this asset, in my opinion, is zero. And then also your coins, if they're sitting on an exchange. So let's say you're on a well-known exchange, I'm not going to use any names, but any of the exchanges, and who knows, maybe the exchange is somewhat levered, or maybe they're not, but let's say they're levered in some way and the price moves in some way, like I just described. Are they bankrupt? And your coin's on their exchange. Oops, please give me my coin. Sorry, it got cleaned out in the bankruptcy.
Yeah.
So, and that's, we're dealing in a really, really raw system. No Federal Reserve is going to step in to bail out any of those organizations. In fact, they'd love it. In fact, they would probably, to my way of seeing it, for all we know, they could be organizing one of these events.
Mhm.
You see what I'm saying?
Yeah.
And so the point I'm trying to make is, you want to own your coins, you want to own them 100% free and clear of leverage, and you want to have your keys, or they're not your coins, because of the possibility of all these extreme events. So it's I feel strongly about that, and I want to throw that warning out there. So the people who say Bitcoin can't be manipulated, yes and no. Yes and no. I think ultimately it's going to settle down, and it'll be widely enough distributed that it won't be manipulated. We're still in the early days here, and so this leverage can be a manipulative factor, in my opinion.
So I guess, when do we get to a point, though, or I guess, is Bitcoin better than gold in the sense that since it's digitally and it clears digitally native, when it makes these crazy price swings, it can clear instantaneously, to the point where, with a bank, if I don't know, I guess the clearing requirements, but let's just say I had 50% leverage on my stocks. I'm trading in Singapore or whatever. I'm trading in somewhere and I'm using high leverage against my stock portfolio.
Yep.
In theory, your bank can give you a call and you have 24 to 48 hours to put up post collateral to, make the difference.
Oh, it's worse than that. Your bank could call and say, we just sold you out.
Okay.
Because because we're in fear. If you read the contracts pretty carefully, they're supposed to give you a warning.
Yeah.
But, what we're talking about here are, kind of what I'm suggesting is that we're going to see volatility that's going to make people's heads spin, in my opinion, when the next time this thing comes around. You have to remember that in March of 2020, the U.S. Treasury market went no bid for a while.
Yeah, I remember
there was
Greg
no
Foss
bid
talking
for
about
Treasury.
that.
It was the safest asset in the world. There was no bid, literally.
Yeah.
Not for very long. And it was right after that Powell stepped in and said, whatever it takes. We're going to do whatever it takes. Which
he restored confidence to the markets. Yeah.
Yeah, and he restored confidence. He was going to print an unlimited amount of money.
Yeah.
And by the way, following that, Bitcoin was slow to get the message. By the way, following that, gold went up $100 2 days in a row, back to back.
Mm-hmm.
And Bitcoin traded up $1,000.
Mm-hmm.
So it kind of shows you, which told me that at the time, everyone knows exactly what gold is against money printing. Some Bitcoiners know what Bitcoin is. Some people are in it just because, number go up, right? And some view it as a proxy for, the triple Qs. Foss pointed out recently, I think brilliantly so, that, there are guys who are, they're pair trading the triple Qs and Bitcoin, figuring they're both risk on assets, and they'll be right. And they're insane. What they don't, Bitcoin and the triple Qs are not correlated. They're just not. Bitcoin's a sound money alternative. The triple Qs are or growth stocks.
Exactly.
So,
Yeah.
so the point I'm trying to make here is that one needs to understand the characteristics of Bitcoin, and that's another thing I will say. You know, you got to be careful about, about modeling it, because we've never seen anything like this before. And so, look, I think Plan B is a good guy. I mean, I generally speaking like his model. I think he's probably done some great work, but when I saw everybody just accepting it as though it were religion, I was kind of my something deep in my gut told me, boy, it can't be that simple.
Yeah.
It just can't be that simple, because nobody knows how this thing is going to unfold.
Yeah.
And so it's very, very difficult to know the future. And so I think you have to, one of the things I do when I look at financial assets is I look and say, what's the history of this thing?
Mhm.
Well, and I've got a chart up on my wall that I use to remind myself. It's a really excellent chart, and I'll try and post it on Twitter again after this is over. And it shows the size of the Bitcoin drawdowns, from inception,
Yeah.
right?
Yeah.
And what we had one that was 84, and we've had some others that are 70, and you've got a bunch that are 50, and a lot that are, I mean, 30 is garden variety. That's no big deal, right?
Yeah, exactly. That's a normal day in the
That's
office.
like, whatever. It's down. My asset's down 30%. Who gives a shit? Yeah, and buy it, but my point is, look, I don't think we'll have another 84% drawdown, but I'm not willing to bet against that.
Yeah.
I don't know. It might be a tail event, but it's not impossible. So, with that in mind, whenever I buy a Bitcoin, I immediately say, would I be willing to hodl this thing at 16% of this price?
Yeah.
And the answer is yes. And furthermore, at 16% of that price, I'd probably buy the shit out of it.
Yeah.
But I mean, that's kind of the way you have to approach this, right? It's not, it's not something that we fully understand. We haven't seen anything like this before. So we're operating in an uncertain environment.
But so I guess long term, though, while you see this asset class in Bitcoin, doesn't that make for a better, stronger, I guess, economy instead of on this fiat system? Wouldn't it be better? There's going to be gamblers, there's going to be speculators in any markets, if for anything. It could be baseball games, it could be poker games, it could be stock market, it could be bond markets. There's going to always be people that are driven by like the thrill of gambling.
Yes.
But with that being said, if Bitcoin becomes is a hard money, and it washes out the good and bad leverage of a system, wouldn't that build a stronger economy long term?
Yes, I completely agree with one proviso. I think that look, most Bitcoiners are going to end up wealthy, and wealthy people are going to probably get involved in government, and hopefully the government's going to become a bunch of Bitcoiners. I actually think there's one set of laws that kind of needs to be changed at a fundamental level to take away some of this financial gamesmanship and risk. And that is, I think we actually need to outlaw derivatives. I think I think we need to outright outlaw derivatives, because they lead to that concentration of money, balance sheet game, financial distortion business. I mean, not outlaw options and, puts and calls, and not outlaw, people who want to hedge their grain, deliveries in the future against a physical. But all the other derivatives, we all saw the movie The Big Short, and, you got the CDS, and then you got the CDS squared, and you got the CDS cubed. I mean, the minute you start getting into that level of stuff, what you're basically saying is, we're turning this entire financial system into a gambling casino, where the biggest bettor can mess around with the natural forces of supply and demand. I mean, prices are a piece of information which make the capitalist society work, right?
Mm-hmm.
Prices tell us all, oh, if I do this, it costs that. And if I do this, somebody will pay me that. And therefore I should invest this to do that. And they're the mechanism or the information that creates rational behavior among economic actors, right? That's what prices are. Well, when you have prices that can be massively distorted by the biggest balance sheet playing the derivative game, you're naturally messing with the efficiency, and you're creating inefficiencies and unfairness in the system. So I actually think there's one set of laws that needs to change, and that is the derivatives. And my suspicion is it will, because I think it'll probably, I think we're headed for the big one here at some point, the one where things really go, the wheels really fall off. The gold price goes to 5 or 10,000, Bitcoin goes to 1 million, the economy's in sham, I mean, it's really a mess. We got a big financial mess. The derivatives implode. The banks are failing. The government, has to print enormous amounts of money. I mean, it's kind of the end game, right, of a
Yeah.
leveraged financial system. And I think when that occurs, what's going to happen is people are going to say, well, we got to fix this. Okay, what do we got to do? Well, one, we got to go back to sound money. So that'll happen. And, it'll be Bitcoin or gold or some combo of the two, or oil or some, or a bank or something. And then they said, two, we got to stop this leverage, because it's the leverage that blew the thing up.
Yeah.
And so it's going to be illegal to operate in these systems with this much leverage. I mean, we just don't need it. It doesn't, all it serves are the brokerage guys who get, filthy rich off of it.
Yeah,
and the
exactly.
big financial players. I mean, there's no rational explanation. There's no rational need for the derivative stacks that we have. There just isn't. I mean, it doesn't make any sense. So I think that's a piece that, as Bitcoiners get more and more influence, I think we'll all have to lobby for that. But it probably will happen naturally, because they'll be a big part of the blow up, in my view.
Yeah. So I guess not that you're a predictor. I think if you were, you'd be a lot wealthier than most people. I think everyone in the investing markets likes to believe that they can predict things one way or the other. Yeah. But I guess what do you think this is eventually going to cause this house of cards to collapse or unravel? If you had to take a guess, or what do you think?
Well,
we would see the gurgling first then.
Yeah, I'm not a very good predictor, and I mean and I've been wrong a lot. I mean, I think the best one can do in the investment business is to get on the right side of a trend. Mm-hmm. Okay. And I feel like sound money people are on the right side of the trend, and the trend is the failure of fiat because of the abuses of fiat. And so I don't think there's much doubt that in the next 5, 10, 15, 20 years, the people who own sound money are going to benefit enormously at the expense of those who do not. Having said that, what's going to trigger it? It's kind of an advanced version of Gresham's law and a loss of confidence. It's Hemingway's slowly then suddenly, right? Mm-hmm. And by the way, we've started to see some of that, which kind of gets me excited, gets us all excited, but then they put it back in the can. I mean, look, Bitcoin going from 10 to 50 was a big deal.
Yeah.
I mean, it was a fire alarm that was working, and it woke up people in Washington. It woke up people in the investment community. It's waking up people everywhere. But now they're fake tapering, and they're pretending they're going to get responsible, and Manchin's making a lot of noise and so forth, and so it's all kind of calmed down for a while until the next one, but the next one will probably take Bitcoin from 40 or 50 to 400.
Yeah,
and it's going to be like more people are going to go, hey, hang on a second, what's going on? And at that time gold will be at 3,000.
Yeah,
and and this is how it unfolded in Weimar, right? You had these surges of inflation, then it would back and fill. Then you have another surge of inflation and back and fill. And because the backing and filling is painful, and because the government wants to stay in place, they're not going to really allow things to fail or the system to collapse. So when things get tough again, we know that the Powell pivot is going to come back. I mean, he pivoted in 2018. He had it all on remote control, and it was like watching paint dry. And then suddenly the market cratered, and he immediately did 180 and said, we're going to print until the cows come home. And they did. And so that will happen again. And each time, notice it's getting bigger. I mean, in 2008, we printed 3 trillion, but it took us 3 or 4 years to do it. In 2020, we printed 3 trillion in 9 months.
Yeah.
So, right. I mean, in the next time, we're going to print 10 trillion, and it's going to be in 60 days. I mean, perhaps I'm exaggerating, but the point is, these contractions or these events, these eruptions are getting more and more rapid and larger. And so my personal view is that we're kind of in a 5-year window to total fiat collapse, that about 5 years from now, it'll all be over.
Yeah.
That's just a gut. I could be wrong. I'm sure I will be wrong, but that's just kind of how it feels to me based on what I've observed.
I got into an argument on Twitter with a bunch of MMT folks, and it was very painful. But they were saying, oh, what we've done was good, and it was good for the economy. I was like, why not 10 trillion? Why not 100 trillion? Why not 200 trillion? And they just didn't have an answer, because I'm like, they're like, oh, well, we're only propping up enough. I was like, so you really think they're smart enough to know like what the proper amount of money is for putting back?
Right. Well, they're yeah. Stephanie Kelton blocked me a long time ago, but their claim, because I said she was John Law, their claim is that they can, through taxes and so forth, they can prevent inflation. Right. I mean, when has the government ever been able to do anything correctly? I mean, they really have no understanding of how the whole thing works, and they're driving the rearview mirror. I mean, it's interesting that they've come along at the time they have, because we have had a 40-year deflationary trend.
Yeah.
And inflation has not been a problem. And you'll recall when Cheney said, "Oh, Reagan proved that deficits don't matter." I mean, people got away with we've gotten away with a lot of stuff. But, there was a guy, Herbert Stein, who's Ben Stein's father. He was one of Nixon's economists. And he coined a law back in the 70s, a great law. Herbert Stein's law is, if something cannot go on forever, it will end. Just a very simple law.
Yeah.
But the point is, if printing money without inflation, it cannot go on forever. I mean, if you print enough money, eventually you are going to get massive inflation. And, because we had, the Lacey Hunt, deflationary tailwinds of the, of the China price and productivity gains and all the other stuff that we've had for the last 20 years, and a complacent bond market, we've had a deflationary setting. But, I mean, the Fed's going to have to buy the entire US Treasury bond market. They just are. I mean, who would buy a 10-year Treasury at at 1.5% interest rate, when the negative real rate is, 5%? I mean, you're getting killed. You're guaranteed to lose half your money. I mean, who holds that? Only somebody who by mandate has to hold that. And eventually those mandates will change. And so interest rates will start to go up, and the Fed will realize that's going to choke off the economy. Then they'll start buying them. They'll go for yield curve control. I mean, you know what their next moves are, right? They're going to do yield curve control. Janet Yellen has already signaled that they're going to buy stocks. They're going to change. I mean, I can just see it. They're going to have the Save America's IRA Act, where the Fed has the right to buy stocks, because we can't have stocks go down. Right? I mean, they do it in Japan, they do it in Switzerland, right? They're going to forgive student loans before the election this fall, right? I mean, they just postponed the student loans, right? So
I go back and forth with the student loans thing, because it is seen as an asset on the federal, the federal balance sheet, it's income for the federal government. So it's why it's like me going to you and say, "Oh, take a haircut on your income," which you say, "I don't want to. I'm doing the same job." And so I go back and forth with it.
Well, they'll just run it through the P&L. It'll just be part of the deficit.
I guess,
Or they might figure out some legerdemain way to account for it so that you don't see it. I mean, it's, look, there's a lot of sleight of hand that's going on here. I mean, part of, all the stuff we're alluding to is just, it's a big Hans Christian Andersen. I mean, this government empire is naked as can be, and we all see it, and we're calling it out. And the problem is that we're a small, loud voice right now, and it needs to become a larger voice. But you asked what would drive us, over the edge. It will be when enough people realize that the dollar is losing value so rapidly that they do everything they can to get out of dollars and into gold or Bitcoin. And so that's why the government has an enormous vested interest in trying to suppress the prices of both of these assets. Have they been able to suppress the price of Bitcoin? I doubt it, but I bet you they're looking at it, I'll bet some of these big exchanges that use a ton of leverage have been contacted. They're probably, my personal opinion is, at some point they'll move against Tether, and that, while that won't be fatal to Bitcoin, in fact, in the long term be a great thing. In the short term, it could be a bad, it could hammer the price. So the way I view the pricing today is, I continue to dollar cost average, but I've got a pot of money on the side. Most of it's in gold and gold stocks, that if the market were ever to give me the opportunity to buy Bitcoin at a discount from today's price, or especially at a substantial discount from today's price, I'd back up the truck. And I mean, if you look at the drawdowns, I mean, so the biggest drawdown to date is 86%. So I think, so 14% of 69 is the high. So, I don't think we're going to see $10,000 Bitcoin, but you can be sure that if we did, I'd be buying it.
Yeah. I'll be buying it all the way down there with you as well.
Yeah. I mean, and I think there's a decent chance we'll see lower than we're at today, but I don't really know. I can't predict.
Yeah, I guess. So I got a few more questions before I begin my wrap-up questions, but I guess, what are your thoughts on the next 5 to 10 years? Do you think they'll be good or bad? And this is just overall sentiment of, I guess, the markets. You can say hard money advocates, you can say yourself. Do you think things are going to get worse before they get better overall? Do you think they're going to get better from here?
a tough question, Chris. I mean, I think, it's going to be chaotic. I mean, the only thing I'd be willing to bet on is volatility. And I mean, the game is afoot, right? I mean, March 2020 was a big deal. They're trying to stuff it all back in the can, and so far so good. They've calmed things down a bit. Maybe they'll calm them down for longer. I don't know. Maybe they've got a surprise coming for us where they attack, Tether, and we get a real drop here. I view it as a wonderful opportunity. I guess I can say this, people in the space need to be physically and mentally tough, because it's going to try you. There's no bull market is easy. And this is probably the largest bull market, biggest asymmetric bet in the history of mankind. And we're talking about, all the marbles, what's the base money? So that, I mean, look, you don't just go from, buying a limited ledger digital token to being super wealthy, without some pain along the way. I just don't think that's the way it works. So, I would suggest that people, get mentally prepared for ups and downs and bad moves by the government and pain. I mean, and the reason I say that is only because I've seen the same thing in the gold market, for 20 odd years, which is not to say that, gold's not working, because gold was $250 when I first started buying it, and it's $1,800 today. So, I mean, I think in general, people in this area are going to do extremely well, and it's a good place to be. But I don't think anyone who thinks it's going to be easy, I don't think hasn't really considered the history and the importance of what they're playing with here. So I see a tough ride, I guess is what I'm trying to say. Having said that, I think it's a satisfying ride, because I think we win. I mean, even people today who are bummed out that we're not at 69. I mean, I try and say this with gold. Gold's really soft now. We've just had a really crappy year in gold, and people are like, "Oh God, this is awful." I'm like, "Well, no, it's not." I mean, don't you remember 3 years ago when it was at 1,200? We were wondering if we're ever going to get out of there. I mean, hell, we're at 1,800 now. I mean, we are winning. I mean, 2 years ago, where was Bitcoin? Right? Bitcoin's still at 49,000.
Yeah.
So we are winning. It's just, it's just not. You can't expect it to be easy. I guess that's the point I would make.
Yeah. I guess what's something Bitcoin folks can learn from the gold folks, and vice versa?
Yeah. Well, I don't know I mean, I've learned a lot from you guys, a ton. What can you learn from the gold folks? I don't know. Embrace the pain.
All right. Fair enough. I like that one.
Embrace the pain. Recognize that you're right, but embrace the pain. I mean, what I used it to do, I mean, just as an aside, because this is kind of a battle over an ideological issue. And my view is, if you're in a battle, you want to be, you got to be ready to fight. And so when gold collapsed from, I got into gold, it was 800, it went to 1900. I made a lot of money in 2 years. And then it collapsed from 1900 down to 1,000. And I lost a lot of money over a bunch of years. And that was hard. And I was in my mid 50s, and I was very badly out of shape. And I thought to myself, you know what? I'm going to beat these bastards. It's going to take me a while. I'm going to beat these bastards. But I'm not going to do it if I don't start taking care of myself. And so I got into CrossFit. And and so now I do a very intense physical workout regimen, and, strong body, strong mind. Right. And so I highly recommend that anyone who's in this and the volatility starts getting them down, or they want to be around for the long haul in the fight, go get yourself in top physical shape, find a CrossFit gym, start working out like crazy. And, you'll think that, okay, whatever happens in the market, that's nothing compared to what they put me through this morning.
That's awesome.
When you do a brutal WOD, I mean, you find out right what your limits are, So,
I think that's great advice.
Yeah.
All right, Lawrence, it's been a pleasure having you on the Amateur Investors. Before I let you go, though, I have 3 quick questions I ask all my guests.
Okay.
They're pretty easy. They're kind of softballs, in my opinion. I guess, what has been the biggest investment or business mistake you've made over your career?
Yeah. Well, I was absolutely convinced that I had gold figured out, and that 2008 was the beginning and the end of the financial system. And so I was all in gold and gold stocks in 2011. and I watched, more than half of my net worth disappear. And, I was convinced I had nailed the analysis, and, in longer term I had, but, markets are a very, very humbling mechanism.
Yeah.
And no matter how convinced you are of something, you always have to consider the other side. And I should have known that at that age, because I'd been an investor for a long time, and I'd learned about leverage. Fortunately, I wasn't levered, but there are a lot of investing lessons to learn. One of them is about leverage. The other is about, questioning your conviction. And, when it started going the wrong way, I should have rethought it. And I didn't, and it cost me a lot. So that was probably the hardest lesson I've ever learned.
Okay.
Yeah.
I guess, what are some of your favorite books, podcasts, YouTube channels, or websites that you like to go for investing information in general?
Yeah. So, well, my favorite book the last 10 years is Safe's book, The Bitcoin Standard. I think it's brilliant. I think it will go down in history as one of the things that catalyzed this movement. I think he's a genius, etc. So that's a favorite. Podcasts, I really like Marty Bent. I really like Peter's podcast, which I was on. It's there are a lot of them I listen to. I'm kind of eclectic. I usually go to, there's a website that I go to every morning that used to be a gold website. It's moving into gold and crypto, called Dollar Collapse. www.dollarcollapse.com. It's run by a guy named John Rubino, who's a friend, a great guy. There's a lot of good information there. Let's see, what else do I check? Zero Hedge, obviously. Twitter, Twitter is a fantastic source of information, as you know.
Yeah.
And there's all these people I follow, and I've learned a lot from Michael Saylor. I've learned a lot from Max Keiser. I've been on his show. Max is a genius. I love Max. I mean, he is truly the OG of the space. I mean, he had so much conviction so early. I don't know how the hell he had it. It almost was irrational, because he looked at all the potential problems, and I could see it, but I just was like, oh, really, man, there's so many risks here. But he's turned out he was right. He was just friggin' right.
I love Max. Max is a funny dude, and he is definitely that like crazy uncle vibe, but in the same token, he's been absolutely right, which it's,
absolutely.
Show me your portfolio is kind of always the question. And Max is like, I'm all in Bitcoin in like early days, 2011, 2012. And a lot of people being in markets in the years that I've been, people are always like, oh, I would have bought Bitcoin at $30. I'm like, no, you would have bought Bitcoin because you know what it is now. You wouldn't buy it then. I wouldn't buy it then.
There were a lot of people. I can tell you a lot of gold people who bought it at 10 or 20 or even 100. And then when it got to 1,000 or 2,000, they thought, this is great. And they sold it. They didn't really, they had a great gain, but they didn't really know what they had, And by the way, Max was around before Bitcoin. I mean, Max was a gold and silver guy. And I'm pretty sure he still owns some gold and silver. He owns a lot more Bitcoin, obviously, and that's been his big focus, but he's not anti-gold and silver. I mean, and it's interesting. A lot of people think, well, all these gold and silver guys, you're fossils, you don't get it. Not true. I was at this show when I gave a speech at, which people should reference. And, they asked at that show, how many of you guys own Bitcoin? Half the hands went up.
That's awesome.
So there are a lot of gold people who get Bitcoin, totally. And it's growing. And I went down there to try and orange pill the rest of them, because I think they're missing it if they don't see Bitcoin. But, Bitcoin wasn't invented until 2008. So until that time, we were carrying the sound money flag. And, boy, we're really glad to see you guys join us. And I think you've got a better weapon. And, we're going to charge the Citadel, and your weapon's going to kill these guys. But we'll be there right beside you. And I don't think gold's going away. We talked about this before the show. Recall that there's 400 plus trillion of financial assets. It's 5 billion of tradable gold. There's 1 trillion of Bitcoin. That 400 trillion is going to get roasted with inflation. That's coming after us. And Bitcoin will go up faster. But gold's not going down. I mean, there are a lot of people in this world who won't buy Bitcoin, but they'll buy gold.
Yeah.
And so, they're both going to go up a lot in what I see coming. So.
All right, Lawrence, thank you so much for coming on the podcast.
Thanks, Chris. Really enjoyed it.
If someone wants to learn more about you or your business or any of your entities that you're part of.
Yeah, there's just really 2 ways to check me out. The best is my website. Got, videos, my quarterly reports on there, and some comments. There's a Bitcoin white paper on there. It's EMA2.com, Edward Mark Alpha, the letters, the number 2.com. And then I'm a loudmouth on Twitter. And so if you go to @Lawrence Lepard on Twitter, you'll see my feed. And And if you want to dig into this derivatives issue or this leverage issue more, I tweeted it this morning. There's a great thread by Caitlin Long.
Yeah.
And everyone should be aware of how the leverage affects the stuff. It's important. So
yeah, definitely. I think after the show, you should definitely post the poster that you have of Bitcoin's price drops, just to let people know.
Yeah,
remind people for sure.
I'll put it up and reference this. Yeah.
All right.
In fact, what I'm going to do, Chris, I'll wait until you post the show.
Okay.
I'll post it on right under the show. Okay.
Yep. It's coming out next Wednesday, so I guess December 29th. But sounds good.
Just a reminder. Okay.
Definitely sounds good.
Sounds good.
Thanks, Lawrence, for coming on the show. As always, everyone. See you next week.
With you.
Have a good one.